What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Tuesday, April 23rd. All right, guys, a little bounce back day here for Nvidia, up $33.18 a share. That's plus 4.35%. Of course, we were down 10% on Friday, so not claiming, anywhere near the full amount. However, when a lot of people go into a volatility day, a day following a big volatility day like we had Friday and then heading into today, it's not uncommon to see an overwhelming majority of market participants betting on continuation. Okay? So when you get a little bit of a hard reverse, at least a bit of a relief bounce, it's never a horrible thing to see for the side that took the hit the previous day. In this case, that's the bulls. So let's take a look here. Now listen, as always, whether the stock is up or down in the after hours upon no earnings event or anything, take it with a grain of salt because the volume's very low. But it is down about, 4 points or so here in the after hours as of right now. All right, let's start here and pull out all the bias we possibly can from a variety of different sources, starting with the volume profile analysis here on the 5-minute chart. Now, what we're doing here, guys, is we're separating the move from the volume itself and looking at it as kind of two separate entities to see, did the volume in the move actually support the bias simply by looking at the price action? It's two different things. It adds kind of another depth of flavor, so to speak, right? It adds depth of information. And you guys know, around here, we're going to do absolutely everything we can to pull out as much bias information as we possibly can. And the reason I make these videos the way that I do, guys, is because this is really what I do, probably a bit more quickly when I'm by myself, right? But this is really what I do when I'm analyzing a stock heading into the next day. I do this regardless if I'm making the videos or not. So this is really for those of you who are looking to take this all a little bit more seriously, regardless of experience level, even if you've never even bought a stock, or if you've been doing this for, 25, 30 years. I think it's helpful for everybody. But the moves that I primarily want to take a look at here are going to be the obvious ones. That's that pop and fade, right? And then period of consolidation that we got off of the open here at Nvidia. And I'm not going to circle it, but I want to look at this push and then that sustained push to intraday high. So let's take a quick peek here and see what we can pull out. So very contextual open. If we compare that to Friday, it's a little bit higher, but a higher volume opening bar is very normal. And today, if we think about this, based on the current things going on around the stock, it's not unexpected that we see over 2.5 million shares of volume at the open, given what happened Friday. Now, if we look at this actual move, okay, what does the move itself represent so we can compare? Well, we get a pop, drop, and consolidation. So by the end of this move, it's essentially what I would call a net neutral or even net negative move, right? We're slightly lower than where we started. So if I'm bullish on the name, given the nature of this move, the net outcome of the move, if I'm bullish, ideally I either want to see no bias at all, or I want to see a little bit of bullish bias on this pop. And if I'm bearish, given it's kind of a net negative move by the end of it, I really want to see bearish bias, right? Otherwise, anything less than bearish bias on a bearish move would be kind of a disappointment to me if I were positioned short. Okay, and by the way, context, right? A small disappointment. This isn't everything. This is one piece of the pie. So if we look here at the volume, we're seeing, obviously, high volume open. We expect that. So we usually ignore that bar as long as it's within reason. And then a fade into the mid to late morning is very, very normal. Okay, and that's really what we got. We're seeing intertwined red and green bars. There's really not one side or the other that stands out, at least to me, more so out of context than any typical day. There's nothing there. Now, this morning, it was interesting. I noticed that in real time, kind of like during this consolidation period, maybe as we started to curl a little bit. And that's really interesting because you had a net negative, just by a little bit, right, move with really no bearish bias at all. It doesn't necessarily support the move. Okay, so it wasn't all that surprising to see this push as the bulls reload and kind of take over, feeding on each other, snowballing through the day, and then more or less consolidating, fading just a tad into the close. Really wasn't all that bizarre to see. Now, if we move on here just to that intraday push, we look at these volume bars. If we want to get really, really picky, we start seeing an increase in volume upon this bigger bullish push, right? Probably the most aggressive move of the day, at least after this morning, right? And we start to see increasing volume on that move. And then as soon as the stock consolidates and pulls back, we see volume tank off. Okay, that's really, really normal in this context. I have to label a little bit of bullish bias. If it were the opposite, right, that would be textbook bearish bias. In this case, it's a little bit of bullish bias, but please don't take what I'm saying out of context. We're not seeing 1,000,000 shares of volume per bar on 6 consecutive bars, not even close. This is just like barely there, so I figured I'd point it out. And then into the close, let's not waste any time on that. That's very, very normal. Okay, actually, I would expect to see a little bit of ramp up a little earlier than that. The fact that we held off, to me, doesn't mean much. All right, so let's move on to the 30-minute and take a look at those self-fulfilling prophecy psychological levels here on the 30-minute. Now, if you guys remember on Friday, we were talking about how this 50 period was likely to continue downside hard, and we got just that. Or, I say Friday, really that video was uploaded late Saturday night. Either way, the weekend video heading into today, Monday, for Nvidia. And that we got that continuation as expected, the 50 period coming down, requiring a smaller move to reclaim that. What's really interesting is the stock's up, I say only, but compared to Friday, it's a smaller move, 4.35% in regular trading hours, but we reclaimed the 50 period. We backtested it arguably 3 times, right? And we barely held. We kind of faded along with it into the close. Listen, I'm not going to lie to you, this is not a strong reclaim. Okay, we kind of hesitated. We barely wicked above it. Held for maybe 30 minutes or so, and then we backtested and barely held as we faded into the close. It's not that textbook high volume break, low volume retest, high volume bounce that I'm typically looking for in a reclaim of a big psychological moving average like the 50 period on the 30-minute. But listen, it's a reclaim nonetheless, but that puts us in a position where tomorrow a retest is certainly in the cards. We could see a hard retest, and if I'm a bull, I want to see, I don't care what volume it makes the retest on because we're already above it, right? As long as we get a higher volume, just anything above average, push away from there, making a decisive move, okay? Saying, okay, this 50 period here on the 30-minute, we're paying attention to it. We're going to hold that as support, at least in the very short term. And bears, you guys aren't completely out of the game, like at all. I mean, you're very much so still in the game. We're talking a few points away from that 50 period. So bears, since we are above that, if I'm a bear, I'd want to see a high volume break, low volume retest, high volume rejection, just a mirror image of what we're looking for, or what we would have been looking for here, ideally today on the reclaim. Now, let's take a look at that 4-hour. You guys remember it wasn't really in play. That's going to remain the case here. That nearest 4-hour area is going to be that 50 period, sitting right above 853 right now. Okay, so listen, I'm paying attention to that in a similar fashion as where I'm looking at the 50 period on the 30-minute, if it comes into play here on the 4-hour. But let's not waste too much time there, because I think you guys get the idea of what I'm looking for there if it comes back into play. Okay, but it's a little ways away. We're 50 points plus. Now, the daily. This is by far the most important chart, especially right now on Nvidia. In the last couple of days, really Friday, we dumped and gave up that 50-day moving average, right? That was a big deal. Okay, we had recently also given up 850, and we now find ourselves back within this kind of 100-point channel between 750 and 850, and that 50-day is basically starting to line up with 850, which makes it a slightly increased strength level, at least psychologically. But you know what the real story is here today, or tomorrow more so on Nvidia? And someone just pointed this out in the comments, actually. I just replied to their comment like an hour ago. $800 a share is back on the table in a big way. Okay, 800 is the most obvious psychological level here in the very near term, and everybody knows it. Everybody's watching it. Textbook psychological self-fulfilling prophecy mentality, right? That's 800 is the game tomorrow. If I'm a bear, I don't care if we're green at 798, do not give up 8. And if I'm a bull, I don't care if we close at 802 as long as we reclaim 8 as early in the day as possible and we hold it as support throughout the day. Ideally, we reclaim it early, retest 800 on low volume, and boom, pull away from 8 to the upside on as much volume as possible. But as long as we reclaim it on decent volume, I don't mind where we close tomorrow if I'm a bull. The bears, again, have a little bit of a wider range because you guys can be slightly green, flat, or, of course, deeper red. Number one concern tomorrow if you're a bear, do not give up 8, at least in a definitive manner. Okay? You know, also bears, 750s on watch, bulls, 850s also on watch if it comes to it. You guys get the idea. And also, again, just being aware that 50-day coming into 850, typically when we see two obvious levels lining up that way, in my experience, it tends to increase strength, not quite by double. It tends to increase strength by probably around, if I had to make an estimate, 50% or so. So it is a little bit of a beefed up level of, in this case, potential resistance. So I'm keeping an eye on that, but a reclaim of that area is even that much more decisive. Implied volatility here. Let's take a look. You can see it faded here today. Again, we're sitting kind of in the mid-range compared to the last couple of months. So, you know, whether we see this thing continue downside, that could be a potential IV crush problem, but that opens up some more opportunity for new options buyers to buy while IV is low, which is typically seen as a good thing. But just be aware, if you currently are positioned, especially in options, right, like if you own purchased calls or purchased puts, of course you want to be correct directionally, but if you don't plan on buying anymore and you're just holding your options position that you bought, you want IV to skyrocket, really, because that kind of IV pumps your contracts. Again, assuming you're also correct directionally. But that IV pumping, that beefs up your contracts a bit more either way, even if you're wrong directionally, really. You have to think of an option contract as like a water balloon with multiple hoses going in, and some can be pushing water, some can be sucking water, and really you want all of them, if you bought the contracts, to be pushing water in, right? But you can have one or two sucking water out, like Theta's is kind of always sucking water out if you buy, right, the contracts, while the others kind of pump water in, and you end up kind of a net neutral, or not as bad as it might be, or a little better than it should be, right? Options are really a great tool if you understand the Greeks, that is, like in and out. And it doesn't take all that long to just study up, take a weekend, because you can really do everything you can to put things in your favor. Okay, there's a lot of power in options. Now, if we take a look, expected move here. Of course, the next expiration we have is this Friday. So the expected move currently being priced in by the market by Friday's close, the difference from today's close to Friday's close, is expected to be plus or minus $38.58 a share. Okay, so let's head back here to the daily chart. Now, by the way, expected move in the weekend video heading into today, I believe the calculation ended up being about plus or minus 17, but we talked for a while about how it's not unreasonable at all to expect a bit higher than that, right? Because we're following a one-day continuation, and the calculation was based on Friday's expiration, because of course we don't get daily expirations with Nvidia. So it was actually pretty reasonable today with a $33 move. Okay, but 38 bucks and 58 cents is the plus or minus expected move by Friday's close compared to today's close. We divide that by 4 trading days left, Tuesday, Wednesday, Thursday, Friday. And then of course I like to add my 50% back to make up for the fact that first calculation kind of assumes a streak. And you get about $14.47 a share, plus or minus. Maybe add a bit more to that as we kind of come into like second day potential volatility spillover. Because that spillover expectation is, at least in my head, expected to be a little bit less on day 3, 4, 5 compared to day 2, right? So $14.47 a share, plus or minus. Perhaps add a little bit more to that to make up for the volatility spillover. Now remember, guys, that's the one standard deviation expected move, literally being priced in by the options traders. We're looking at real raw data, doing the analysis, the volume profile, the psychological levels, right? And then the volatility expectation with the expected move. Then also what we're going to do here in a second is look at the options trader directional bias, okay? So, you know, the truth is, if you're looking for someone to watch who's going to tell you that Nvidia is going to be up 147.5 points to the upside tomorrow with certainty, well, in that case, you're after hopium, not data. unfortunately, and I'm certainly not your guy. So let's take a look here and take a look through the directional bias from the traders. Okay, this is the actual call put ratio from just today. We had 1.55 million total contracts traded. And of that total sample size, we got 913,000 calls, 633,000 puts. So we are seeing a bit of a call side bias in the overall today. Now, the 0 to 20 delta range, remember guys, on average, those are going to be those short-term speculators. Okay, this video is primarily geared toward tomorrow, so that's what I'm interested in. 390,000 calls, 270,000 puts. So we're also seeing a call side bias out of the short-term bets being placed as well as the overall call put ratio. Listen guys, if you want to get real-time alerts to my in-play stocks every single day, that link in the pinned comment will take you to the 4 membership tier options. All 4 membership tiers, by the way, get access to the in-play alerts. And then from there, you'll see that each one, of course, has different benefits, perks. For example, Platinum One-on-One is the highest level. That's my smaller one-on-one group that I'm working with directly, usually through voice message every single day. Listen, if you got value out of this video, Nvidia is a daily upload, so please go ahead and subscribe to the channel. Helps out tremendously, and I'll see you in the next one.